environmental, social and corporate governance reporting platform, ESG. We're proud to be supporters of the RIU conference, and I'd firstly like to start by congratulating Social Suite customers that are here presenting throughout the duration of the conference. Black Canyon, Coda Minerals, Gallon Lithium, Galileo Mining, Helix Resources, International Graphite and Nordic Nickel. These companies, along with 80 ASX micro to small caps, understand the importance of ESG to create long-term organisational value. The Social Suite platform is specifically designed for micro to small caps in supporting them, one, to attract capital from investors that value ESG disclosures. Two, creating revenue through responding to supply chain requests and the negotiation of offtake agreements. Three, mitigating organisational risk while building brand value. The Social Suite platform is easy and affordable for the smallest of organisations to get started with ESG. This is complemented by our industry expert ESG coaches who will help you with your ESG journey. We wish all companies and investors a successful RIU conference, and we're here to help with your ESG needs.
That's forward,
Yeah,
and then backwards, and a laser.
yeah, laser will not be getting.
Yeah.
Just to keep you all informed in the room, I'm currently missing my first presenter. So I have gone and searched for, oh, hold on a second. I'm not missing her at all. Hello, everyone, this is Jennifer. She's going to be our first presenter. So let me just rejig that, pretend I never said that at all, and I need my eyes tested as well as my hearing, Jennifer. So I'm just going to go at the back, rejig the desk, and then I'll come down and Okay, everyone. Session 4. Welcome to Speed Dating with Investment Potential. And I should have known actually that our first presenter is a Canadian, and Canadians are always very well mannered and on time, and they always do the right thing. So I shouldn't have even thought you weren't here. Jennifer Neald is the Chief Executive Officer of Peak Minerals. She actually joined them back in October 2021. She is a geologist. She's also a geophysicist. She's worked for a number of organisations, including Gold Associates, Newmont, Falconbridge, and really enjoyed the exposure to mineral deposits all over the world. This year, 2023, she's focusing on building a strong team and focusing on core projects, and we're focusing on what you may bring to our investment portfolio. Would you please make her welcome, everyone?
Very good. Thank you for being here at 4 o'clock on the first day. But I'll let you in a little secret. This is probably, they've saved the best for last. So I think you'll get yourself a good deal if you're willing to invest some of these companies. All right, so it's no secret, I talk about this quite a bit, that when I came on board, there's quite a few projects and it's a bit overwhelming. When you look at them, we got the Murchison, we've got a Green Rocks and Arihidi, you move up towards the Kimberley, again, more copper projects there. And then out towards Victoria, we have Yandon, which is a kaolin rare earth project at the moment. So it keeps us quite busy. So how do you work through all these things? We need to have a better strategy for 2023 to move these projects forward and focus on the really core projects. So you kind of work through these 5 kind of things. These are important for me. So do we have an exploration model? What is the scale of it? What's the cost involved? We all need to come to terms with the fact that heritage and ESG are just inherent in these projects. And what's the risk? And I'm not talking about the normal risk. Maybe it is the normal risk. I'm talking about that risk that you're going to take a leap, that geological intuition. And I'm going to define that really quickly. It's not anything flaky. It's not a gut feeling. We all know that's not a good idea, but it's really about experience of your exploration team. And it's about experience in that model type and willing to step outside of the box and move forward. And also evaluating these projects as these leaps in knowledge. If we're not able to make a big leap in knowledge with some of the work that we're doing, then we probably shouldn't be keeping this project. So about 15 years ago, I was at PDAC. And I just got married at the time, and I had my ring on my finger, and a man kind of was staring at it in disgust, which doesn't feel good. And he said, "I can get you a bigger diamond." I was like, "Thanks." He quickly got hustled away. My friend came running up to me. She said, "Jen, that must be what normal people feel like when they meet movie stars." I'm like, what? Turns out the guy was Chuck Fipke. So he's a famous Canadian prospector. And at the time, he had this idea, this thought that a new model and this geological intuition that there's kimberlite. There's more than one kimberlite. They come in clusters. And one of these kimberlite pipes might have diamonds or might be diamondiferous. So he was quite right. And after 8 long years, he found Lac de Gras deposit, which BHP purchased for a cool $400 million. And a few years later, sold the rest, the 20%, for $67 million. So that was quite a successful story. I never saw my diamond. I was a little bit upset about that. But it kind of reminds me. So when you think about intrusions, now I know geology people will be a bit upset about the comparison. Kimberlite's quite different, but you look at all the different intrusions, and it's the same. We have these mafic, ultramafic intrusions, and these are represented by these red spots in the magnetics. And not all of them are going to be mineralized, but we need to explore these and make sure and check that, some of them might be mineralized. Some of them might host a world-class deposit. So we have quite a large land package here. We're quite focused right at the moment on the Rixon, Lady Alma, and Copper Hills area. This is kind of the model we're working with. So this is, again, part of my criteria is that we have a really strong working model. We've been able to prove a little bit of this. And that's extremely important because if your model's wrong, then you need to either go back to square one or change the model or change the project. So seeing that we were able to prove that we had mafic, ultramafic intrusions, and we had nickel copper veins with high tenor. So the tops of these fingers, we call them the fingers of God, represent, or the hand of God, represents kind of like these intrusions that you see in the magnetics. And what we get is you want to be in these smaller intrusions because you're more likely to get more sulfides closer to the surface in these later pulses of this big magmatic chamber underneath. So first we'll focus on Copper Hills. We haven't done too much here in the last few years, but previously we had there was a lot of concentration by other explorers on this area, mainly because there is quite a bit of copper, but I don't want to focus on historic occurrences. I don't think that's valuable. But what we do see is that we've got a lot of disseminated or remobilized mineralization. And the model is, based on some of the EM that we've done and seen and reprocessed, is that potentially, if this is just the top of the system, you will get disseminated mineralization. And as you get deeper, you'll get more net textures, and then you'll get more semi-massive and massive sulfides. We do see in the historic core some veins of magmatic sulfides. So it's kind of it's a good idea, and it seems to kind of check out a little bit, but we need to drill to explore, which is why we have EIS funding that we received in November 2022 for up to 4 holes. We also have the Rixon and Lady Alma area, which we've also previously explored. These are our results from last year. We were looking at EM anomalies with these RSC holes. What we kind of put 2 and 2 together is that potentially as EM anomalies are representing this platinum palladium, this layer, there seems to be some kind of, we're not totally sure yet, just trying to figure this out. Arihidi, we're currently drilling Arihidi with diamond. Again, another EIS funded project. We got Samphire tenements all around. It's on the same basin as Rumble Resources. They're quite a ways to the east. So our target mineralization is potentially VMS or sedimentary hosted copper. Similar to, you've got the Duna copper for the sedimentary hosted copper, or very much like DeGrussa if we're looking for the VMS model. There is quite a bit of historic copper on the ground, but we need to, again, people have drilled under this copper blanket and they've come up short. So what's the problem with the model? Is this something more like this? Now, I know people are going to curse me and say this is completely wrong, but I can draw it 20 different times and it comes up different every time. But the main thing is that we've got these faults. We've got to find the faults. We've got to find where the fluids are moving up and what unit is the unit that the copper could be associated with. Okay, that's right. Okay, so I'll move on from that and move straight to Yendon. Yendon is our project out east. It's our kaolin rare earth. It was previously, there's a PFS done for HPA with NPV of 692 million and a rate of return of 34%. So it is quite a tidy little deposit on its own as a kaolin project. It has a 3.7 million ton resource and it is growing, but we've kind of stopped the update on the resource because we're evaluating this rare earths first. But it is looking good because we have heavy rare earths and light rare earths. But that metallurgical work is currently underway. So I guess Peak had a busy year last year. The share price didn't fare quite so well. But we've got 1 billion shares on issue. Still got 1.2 million in the bank. And look, I think now is the time that we need to start investing in copper. We've seen again and again, people investing in lithium and making a tidy amount of money, but we all seen the 250% deficit in copper over the years. And people will argue that's changing or that might be incorrect. But ultimately you need to invest in good projects, good people, the technology to see deeper because these things are going to be deeper. And we need to get very comfortable with inherent risk, with geological intuition, and really putting our money where our mouth is. So I'm getting cut off now. But thank you very much. And if you never did, you should, because things are fun and fun is good. That's by the great Dr. Seuss. So please invest in Peak.
I'm thinking that was just I'm sure you just quoted Dr. Seuss. I love Dr. Seuss. Fun is good. Yes, it is indeed. All right. Fun number 2. Now, just a reminder to our presenters in the room, it's 10 minutes. I'll ring the bell at 8 minutes. I'll stand up at 9 minutes. No, unless you're like Mr. Carnaby and I wasn't sure which way I should be going, but now I'm on the ball and there's no other choice. You're a happy looking fellow. And there's reason for this, isn't there, Robert, Ryan? So Robert is the managing director of Rox Resources, and Rox Resources has the historic high-grade You and Me gold mine, and it's moving even closer to return to production. So you must be a very happy camper at the moment. So Robert, you were appointed last year, October 22, so you didn't make it to our Southwest Connect. So I'm really eager to hear what you have to say. Robert brings more than 20 years of experience in project development and delivery, as well as operational experience to Rox. They've got 10.5 million in the bank. They're currently waiting or currently undertaking drilling. The question is, should we invest? Over to you, sir.
Thank you for the introduction, Christina. And thank you everyone for attending today. Understandably, it is the last session, but as Jennifer said before us, these 10-minute power sessions are probably some of the best guys you see today. Now, Rox Resources, we've got a big resource. We've got 3 million ounces in the ground. We're progressing that. We're actively drilling now, looking to upgrade this resource to restart the You and Me gold mine. And it is a high-grade deposit. So what we have here in an underground plan and a production target is somewhere around the 5 gram per tonne mark. We expect to improve on that as we continue to drill out the resource and improve the financial metrics of the operation from the scoping study that was released last year. There's significant upside on the scoping study, with only 20% of the resource that was included on that study. We're well funded with $10.5 million in the bank to take this project through the feasibility process and well into next year. And we provide an attractive valuation. Today, we're trading at about an enterprise value of $30 or $30 million, which equates to about $10 a resource ounce. By any metric that you want to compare gold explorers, gold developers, and gold companies, that's cheap by anyone's metric. And the board has a vested interest, as well as having a large shareholder on board with Hawke's Point as well. So they've made commitments to follow the company all the way through into production, and they've further extended that commitment with a recent placement that was completed in the last couple of weeks. The You and Me gold project is located just outside of Mount Magnet, just 20 kilometres to the east of the Discovery Pennies West, which is now being mined by Ramelius Resources. The You and Me gold belt is highly underdeveloped. There hasn't been, until Ramelius and mining pennies now, hasn't been any significant mining in this belt since about the mid-90s. That does present a fantastic opportunity because the gold prices then were around $400 an ounce. And the history of this belt is of high-grade gold production. Here we have the You and Me gold deposit, which is continually produced at 10 grams plus historically. It's produced over 600,000 ounces, pushing close to 700,000 ounces in total production, and we expect to see a lot more coming out of here in the future. The total trend at You and Me underneath the old open pits, there's a total endowment of about 4 million ounces in this corridor. It is a fertile corridor, and I've always said, if you want to find another 1 million ounce ore body, the best place is to drill right next to a 1 million ounce ore body, and hopefully we found that in Midway moving forward. We have an extensive drill program underway, 23,000 metres going straight into the ground, looking to really upgrade the inferred component of our resource so we can fast track through our feasibility studies. It is a hell of a program that'll look to target the link areas and Kathleen areas of the main ore trend, as well as inclusive of drilling at what is a recent discovery out at Midway. And we are excited by Midway. It's located just between the bunker pit and the main You and Me open pit. There was an anomaly picked up in a high-res magnetic survey back in 2021. 4 drill holes were drilled at Midway. Each of those 4 drill holes intersected 2 mineralized lodes, all carrying between 20 and 40 gram plus meter intercepts, and many over 100 gram plus meter intercepts. What we expect to see in the recent drilling here is more of the same. We are stepping out to continue to grow this deposit, and it is open in all directions. We've got 6 holes targeting the initial step out drilling as part of this resource, and we'll look to expand upon that as results come in. And the scoping study shows probably an annual production rate of about 70,000 ounces per annum. But as we said, it only includes around 20% of our total mineralized inventory. Now, if we look to upgrade the inferred resources and add as much of that back into the mine plan, you know, at current production rates of 480,000 tonne per annum, we'd look to expand upon that. And can we push it to 600, 700, potentially even 800,000 tonnes per annum? You know, all of a sudden at 5 gram per tonne head grade, that starts pushing you out plus 100,000 ounces per annum. And that's ultimately where we think we could grow this opportunity to, as soon as we continue to drill out this resource. We've gone down the method, the production method of producing a gold in concentrate. Now, it is a low capex solution to dealing with sulfide ore bodies. Now, the benefit that you and me has, and the historical information and metallurgical test work that we've completed, shows that from a relatively low mass pool, you do get a high grade, low arsenic gold concentrate. And that is significantly important within the world gold concentrate market, because 12% of the world's gold comes from gold in concentrates. And it's probably not something that's thought about too much in Western Australia, where the majority of our gold mines are just standard CIL gold mines. Whereas there's a lot more operations overseas, and there is some in WA like Deflector, where they produce a gold concentrate and sell that into the global market. Now, where you and me will fill a niche in this market is it has a low arsenic concentrate. At levels of 2% or under in the concentrate shows that this will be a highly attractive concentrate for traders, and you know the terms that you will get will be a premium in comparison to what others get on the market. And there's a lot of upside at the project. As I said, when we talk about 20% of the mineralized inventory going into the current underground scoping study, we've ran some optimizations over the last few months. And as you can see with the golden shapes highlighted on screen in front of you, there's almost 100% more material within the resource that we need to drill out to be able to add that into our future studies. This does show that there's a lot more to give at you and me than what we've currently outlined in our scoping study. We'll continue to drill this out over 2023 and look to upgrade this to be able to get it into pre-feasibility studies before the end of the year. And that's our focus. The 20,000 metre drill program is really looking at converting the inferred resources into indicator material, whilst really having a look at expanding out that Midway discovery and looking if we can get a resource put together on that to include in our feasibility studies. The resource update will underpin the feasibility study that will hopefully be due out before the end of the year. We're currently building a roadmap on how to execute this plan, and our expectation is by October, November this year is to have that pre-feasibility study complete. We'll keep on going with the metallurgical test work to ensure that we actively pursue this underground gold concentrate and the high-grade gold concentrate to be able to market that effectively to global traders to get the best returns for shareholders as possible. And the next point is the regional exploration. Now, it's something that I haven't touched on any further in the presentation, and I think it's something that has a lot of upside, because when we start looking at areas like Lindisgossen and the like, they haven't seen a drill bit here for a very, very long time. Thank you very much, everyone. And Seems I've timed that just perfectly because Christina was about to kick me off the stage.
You were perfect. You were just nice and calm. It was a real pleasure. Thank you so much for that. Enjoy it. So 10-minute speed dating with our potential mining investors continues. Mark Csar, would you like to come up and join us, sir? We're talking Bulletin now. They're a well-funded lithium and gold explorer. Their flagship Ravensthorpe lithium project is located only 12 k's from the operating, is it Mount Catlin? Mount Catlin lithium mine in WA Southwest. Now, the drilling is expected to commence upon receipt of environmental permits. This is, as I said, their CEO, Mark Csar. He's here to update us on the project. And I drove past it on my way down to Esperance for the holidays. Brilliant location, really easy to service. So interested to hear what potential it has for us. Would you please make him very welcome, everyone?
Thanks, Christina. I'll just start with a photo of pegmatite on the ground with one of our geologists, Sam, walking through there. Bulletin, as Christina said, we're a well-funded lithium and gold explorer. We've got over $12 million in funds. We're fairly tightly held with the top 20 shareholders owning 47% of the company. And the board of management's also got a lot of skin in the game with 25%. I'd like to make a note of Mr. Keith Muller as our new director. Keith, for those who are aware, used to be the general manager of the Mount Catlin lithium operations, which is just down the road from us. Brings a lot of experience in lithium development and mining in the area, and particularly in our Ravensthorpe area. We're very lucky to have him on board, and we hope to be using his skills soon. Our Ravensthorpe project, we think, is one of our most prospective spodumene lithium projects, awaiting drilling approvals. We're in the Ravensthorpe area, which is a known mining area with Mount Catlin just 12 kilometres away. Its potential near processing facilities are there. We've got strong surface mineralisation of spodumene at surface, and it's coarse and high grade. And what work we've done shows that it should go very well through a milling processing circuit. We found over 100 pegmatites already, and we're still working to find some more. Because we're so close to Mount Catlin, we're using Mount Catlin as an exploration model. It's in the same geology as us in the Allan Belt volcanics, and what we're seeing on ground looks very similar. So their resource currently now stands at 13.3 million tonnes at 1.2% lithium. Their current mine plan is to 2025, and they're pushing forward to 2027. But like everybody in the area, in the lithium game, they're trying to find more. Their spodumene pegmatites have a lepidolite, to the northeast. They're gently dipping. There's numerous pegmatites, not just the one. And what they're seeing is that they're stacked with variable thicknesses. And that's what we're tending to see on the ground as well. We're seeing two pegmatite trends. The first pegmatite trend I'll talk about is our eastern trend, and that's where we've got our highest spodumene grades up to 7% lithium in the rock chips. The trend extends over 4 kilometres in length, and as I mentioned earlier, we've got over 100 pegmatites to date. And I'd just like to point out, if this works, I'm just going to talk about this main area in here where we're seeing multiple stacked spodumene pegmatites. The big pegmatite, as we're calling it, is what we're calling a concentrated stacked swarm of pegmatites. Up to 40 pegmatites we've noted on ground, again with very coarse grained spodumene, which is very important for the processing side of things. The pegmatites as individual units are up to 200 metres wide. We've seen on surface, we believe they're up to about 10 metres thickness, but they may pinch and swell, just like at Mount Catlin. And they've dipped very gently into our tenement at 10 to 30 degrees to the west. That's going to be our main drilling target. Just some quick examples of the coarseness of the spodumene. They're up to hammer size, up to 30 centimetres in size that we're seeing through there. The western trend is what's been historically explored for the past. It's dominated by lepidolite. There was historical costing there of 10 metres at 1.1% lithium. Drilling around it didn't prove up too much. We've been working further south, finding lepidolite and rock chip grades up to 4.5%, which is pretty good for lepidolite. I've also just discovered, and if I push on to the next slide, spodumene samples. It's the first time we've seen significant spodumene on the western trend there. It's just north on our tenement boundary, all came immediately to the south of us there. We're seeing, although the grades are lower, it's a bit more oxidizing there, and the spodumene is a bit finer grain, but it's certainly encouraging. We've seen 100-metre long strike up to 10-metre wide spodumene bearing pegmatite in that area. And just some quick examples of lepidolite and spodumene in the Western Trend itself. And as mentioned, we've seen both coarse and finer grade spodumene in the Western Trend, whereas on the Eastern Trend, it's all what we're seeing has all been coarser grain material. And the reason I go on about the finer grain and the coarser grain is that it is important as an end product. We've done some preliminary test work in the area, and we've seen that it's conventional processing methods, just like what Mount Catlin has. Good concentrate grades of greater than 6% lithium. Importantly, very low in iron, so it's a very low deleterious. It's going to be a good quality product. And further processing, our consultants are saying, is likely to improve outcomes. This was just simple desktop work in the labs. So it's all, as we find more and as we get more samples and through drilling, we expect to do more of this work and hopefully prove that it should be something there that's worth the value as a saleable product. So where we're at, we're keen to go drilling. Our main area is at the big pegmatite area. We've completed our spring environmental surveys. We are working within a Kokarinnup timber reserve. Consent was provided to us to explore the tenement. That doesn't mean we can just walk on the ground. It is an area that is forested and there is significant vegetation in the area. So we've done our flora and fauna surveys in the area. They've found the work we're doing is not going to have significant impact. We've presented that to the departments and we hope to get a response shortly. But we're also wanting to do the right thing by the community in the area too. Mining's becoming a large activity in the area here. We have not only ourselves in here, but also have a large nickel mine just around the corner from us as well. So it's important to look at the long term to make sure we're a good community person in the area. So we're doing more than what's minimally required, and with the intent that we're going to be here for the long term. While we're waiting for our permits to come through, we're not standing still. We're still looking at expanding the potential of the area in the local area here. Earlier this year, we did some LiDAR work over the forested areas, and we've identified over 50 new targets. And indeed, the spodumene that we saw in the Western Trend was from this work. We're still mapping in the area. We think there may be potential for a third pegmatite trench to the west, so we're just going to keep on working. And we're also looking further north. We picked up some ground recently, just immediately north of us, which is more in farming land. Can't use LiDAR in farming land because it's all been graded, but we can use other geophysical methods such as radiometrics. And we've done some surveys over the area and we have a 2-kilometre trend in there, which is ready for us to start doing some soil sampling. So while we're well funded and we've got where we can, we'll keep on looking at further acquisitions in the area if they're viable for us. Just quickly, I want to have a touch on our other projects, Lake Rebecca Gold Project. We've just come back from there. Thank you. Just come back from there doing a diamond drilling program. It's down the southern end of the Canopy terrain where there's large low-grade deposits. And there's 2 in our area there, Rebecca and Lake Rowe. We've done some RC drilling on the land. We've also done extensive air core drilling further along strike. And this is where we've been doing our diamond drilling as an initial concept test to see whether there's mineralisation at depth. We've had some up to 7 kilometres of anomalous soils in ground. It's certainly an area worth testing on a large, low-scale deposit. And there certainly is a lot of interest in the area in the gold market as well for this part. Just very quickly on Chifley Gold Project, about 50 kilometres south of our Lake Rebecca Gold Project, just 20 kilometres down the road from Lake Marlborough. It's in a dilational zone on a granite setting, very typical of the gold deposit settings in the area. We're doing some gold in soils in there. Should it come good, we'll be doing some more air core drilling in that area as well. So that's Bulletin in a quick nutshell for you. It's good early stage exposure to lithium. We've got a great project area, great fundamentals in terms of moving forward in the area. Got a strong cash position to move ourselves going forward. And we're always looking to add value to what we're doing. So thanks very much for your time.
Thank you, Mark. All right, 4 years ago, the Hermosa zinc deposit, have you heard of that? It's in Arizona, and it was snapped up for $2 billion. It was a 100 million tonne zinc deposit. Big question is, where is the next one? Could it be closer to being discovered than we think? In fact, could our next presenter to the stage, Rumble Resources, know something we don't know about the world's next big undeveloped zinc deposit? This is their MD, Shane Sikora. He's looking pretty confident, don't you think?
Thanks, Chrissy. I appreciate that.
I don't know. Yeah, I've also been told that you're a very good card player. You're particularly skilled as well, though, in the art of business, strategy, joint venture, all those things. So let's have a listen to him and see if he's got what we would like to invest in. Please make him very welcome, everyone.
Thank you, everyone. I appreciate your time today, especially late in the afternoon. So what is Rumble Value Drivers? We're 18 months on from our major discovery, and we believe we have an emerging world-class base metal discovery. So to date, we found over 13 kilometres of zinc-lead mineralisation, which is zinc sulphide dominant up to 10:1. So this is a zinc discovery. It's shallow, flat-lying and open in all directions. And what that lends itself to is a large-scale, low-cost open pit mining proposition in the world-class mining jurisdiction of Western Australia. Our initial exploration target was 40 million tonnes, but we quickly upgraded that to 100 to 120 million tonnes at 3.5 to 4.5% zinc-lead sulphide, which would get us into the giant category. Within that mineralised envelope, we're starting to see high-grade, well-defined zones of 5 to 8% in these high-grade feeders. So that is going to be a focus of our ongoing drilling, not just for resource, but for new discoveries. To date, we've tested less than 15% of a combined strike, which gives us the potential for provincial scale tier 1 discovery potential, which gives us that exceptional potential to increase to that supergiant category of 300 million tonnes plus. And that will be through known mineralisation and through new discoveries as well. At the back end of last year, we announced some excellent metallurgy, where we got high recoveries and marketable concentrate grades, which support a potential simple low capex and opex flow sheet. And what's exciting is we've now done enough drilling to work towards our maiden JORC resource. So we expect that to be sooner rather than later, and we can't wait to get that out to the market. Late last year, we also intercepted high-grade silver and copper, and what that actually showed was it's a separate mineralisation event to the zinc lead. So we have that potential for independent silver and copper deposits throughout the course of the project. So if this all comes together, we have a multi-commodity cycle asset, which has a potential multi-decade mine life. Very exciting. And like any good company, we're actively growing our high caliber team. Our team has a successful track record in major discoveries and mine development. We had circa 9.5 in the bank as the last quarterly, so we got a strong cash position. Bradley Watson from Bell Potter is doing a great job in completing some research on the company. We also have a big spike on our discovery. Like a lot of companies last year, we had a pullback. But as we're heading towards our maiden resource, we think we can see significant share price and market cap increase. There's never been a better time to make a zinc discovery. It's a critical mineral in the USA. It's got a strong future role in renewable energy and solar panels, wind farms and EV vehicles. 4 of the 10 major zinc production mines are going to be running out of ore in the next 10 years. And you can see in the schematic there, by 2040 through traditional requirements, there's a big deficit looming by 2040. And if you add in the South 32's climate change scenario, you can start to see a really big gap looming. So what it says to us is we need to see new mines and new discoveries. And what's going to fill that gap? We believe Irahidi is a globally significant zinc discovery. You'll see there 100 to 120 million tonnes open pit target gets us into that giant category. As we've tested less than 15%, there is significant potential to grow that to supergiant. Now that's just in the open pit scenario. There is that potential for high grade underground as well. We're starting to hit high grade up to 20% in these feeder zones. And you'll see here too, the most recent zinc lead transaction, like Chrissy mentioned before, is the Hermosa discovery. That was bought by South 32 for $2 billion cash. We're sitting here at 150 mil market, about to announce our maiden resource. Pretty exciting times. We've done over 100,000 metres in drilling. We've done massive geophysical programs and geochemistry to start to develop this target. So you'll see here, there's these feeder zones. The mineralisation's coming up through multiple geological formations, so target 4 and 5. We're focused on 1 and 2. This is known as the Navajo unconformity. When you're near that high-grade feeders, you've got big mounds of mineralisation, much higher grades, and as it gets further away, it decreases. But because we've got a whole series of these feeders, they join up like a coal seam, hence why we have this big mineralisation footprint. And of course, our focus is trying to understand how to target those feeders, and we believe we're starting to get our eye in there. But what's exciting is target 4, which is 2 layers below in the Iroquois. Strickland Metals to the south of us intercepted high-grade zinc mineralisation in that location. So there's no reason why we can't find high-grade, high-angle underground mineralisation as well in the future. This just gives you an idea of the provincial scale potential of the project. We're focused on the Chinook prospect, 5Ks by 2Ks in open in all directions. We've got the Tonka and Navajo prospect, which is 8Ks by 2Ks in open in all directions. We're now doing some work with some geochemistry and airborne gravity across the Sweetwater trend and the Navajo Southeast trend, which will be providing us with new targets for new discoveries. There's no reason why it doesn't repeat all the way through. And also, we've got that Iroquois 2 layers below as well. We are just at the tip of the iceberg of what this project can uncover. We're zooming in now to the Chinook prospect, and you'll see that there's the Calatan feeder zone and the Chickaman feeder zone. Now, whilst we're targeting 3.5 to 4.5%, within those feeder zones, you're getting 20 metres at 9%, 10 metres at 7, 19 metres at 6. The grade significantly increased when you're in those feeders. Now, whilst you've got these feeders close together, you've got that mineralisation footprint, which gives you a strong grade continuity. This particular location is 3:1 zinc to lead ratio and has a very high metal content per vertical metre. Now, this will form the basis of our maiden resource, or one of our resources. This is open in all directions. To the south of the Chinook prospect, we've got the Tonka Navajo, which is now a large 8 by 2 kilometres and open in all directions. Now, we focused on north-south feeder structures early on, but through good technical work, we started to see that the gravity was showing east-west structures. We then drilled the Colorado Fault Zone, which is now over 2 kilometres long. And you can see there is a stack of feeders all the way along. The maiden resource will focus on that Tonka prospect and the Navajo, but you can see there's significant growth in this particular area. This particular area is up to 10:1 zinc to lead ratio, just showcasing the zinc element. As far as metallurgy go, we had excellent results at the back end of last year, where we're getting high zinc recoveries of up to 90% in cleaner concentrates, coarse grind 150 micron. We're getting fast flotation with clean sulfide separation in site water, very little reagents. This lends itself to a simple and conventional process flow sheet that it could be a low capex OPEX operation. The zinc concentrate to 59% is highly marketable and is in the higher end of global benchmarks to current developers and producers. But we actually have the potential to significantly improve the metallurgy through optimization and beneficiation. Here we have the high-grade copper and silver scenario. We've been drilling vertical holes. So it was quite unlikely to hit that high-grade copper because it's actually vertical. So something we need to look forward to in the future is actually doing some angled holes. And within that Irahedi region, you've got the Thaduna and you've got the Degrissa discoveries as well. So this has the potential for independent copper and silver deposits because it's a separate mineralisation event. Sustainability is a very big thing for us. We believe in engaging with all stakeholders, in particular the traditional owners, and we're doing a lot of good things in the region to support them and work with them on opportunities. Near-term catalysts at Irahedi, the most important slide. RC drilling at Tonka and Navajo has been completed with assays pending. We've got RC drilling at the Chinook West extension with assays pending. Another really exciting one is the geochem and airborne gravity has been targeting new high-grade feeder structures throughout the course of the project. That's all pending. As I mentioned before, our maiden JORC resource estimate is not too far away. We've already done all the drilling required. Now it's about getting it out to the market when it's completed. Our drill program planned for 2023 are going to be focused on expanding on the known mineralisation, new discoveries along the Sweetwater and Navajo Southeast, looking to understand the high-grade copper and silver, and then further optimisation of the metallurgy. So all in all, very exciting time for Rumble shareholders, very exciting future ahead. Appreciate your time.
Thank you very much, Shane. Can I ask Chris Hansen, Managing Director and CEO of Greenstone, to join us, please? Now, Chris is Chris, right down the back there, is a multidisciplinary metals and mining professional. He combines core technical fundamentals with a really strong finance and project development mindset. He initially focused on building solid technical foundation. He's got robust investing skills, project development expertise, market knowledge, and some really strong industry relations. He's here to tell us today, in 10 minutes or less, the story of Greenstone Resources. If you have shares, why should you hold? Why would you buy them? And why are you backing them? Tell us.
Thank you. Good afternoon. And again, thank you all for joining. Over the coming months, Greenstone is entering into very much a transformational period where we're looking to unlock the true geological potential across our exploration and our development assets. I'll try and keep the pointy end of the presentation fairly brief. A couple of key points to note here is that our cash position has changed as of yesterday. We announced a $3.3 million capital raise, leaving us well funded for the upcoming exploration and development activities. The other point I'd make here is the composition of our shareholder register, with our major shareholders, Peter Bartlett being the founder of Barminco, holding 9%, and Mark Creasy, the renowned prospector, holding just over 4% of our register. Our top 20 register accounts for around 38% of the company, so tight and well held. Without detailing the specifics of the board and the management team blow by blow, I would highlight that the new board and management team do cover all of the key skill sets required throughout the development cycle of a project, being exploration, project development, operations, capital markets, and finance. Importantly, more recently, we added James Crozer to the board late last year. James brings with him over 25 years experience in mining and principally within a narrow vein underground mining environment. Now, there's two key focuses for Greenstone at the moment. Number one is our Coolgardie mining hub, which is comprised of 3 principal gold assets. And the second focus is our Mount Thirsty joint venture project. And that'll be the structure for today's presentation, initially talking about the Coolgardie mining hub, followed up by the Mount Thirsty joint venture. Now, the important thing to note about this slide is the location. Unlike a number of our other gold developer peers, we're not located in the middle of nowhere. We're only a 35-minute drive south of Kalgoorlie, being the epicenter of the West Australian gold industry. We're supported by a network of existing infrastructure, being sealed road access to site, grid power to site, and also a number of neighbouring toll treatment plants and facilities. We're also surrounded by a number of other mid-tier and major producers, including Northern Star and Evolution, which, given our resources are on a granted mining lease, will only serve to expedite our path to commercial production. The second point that I'd highlight on this slide is very much the scarcity of these types of assets, and principally Burbanks. Within a 100-kilometre radius of Kalgoorlie, Burbanks is the only pre-production asset that's greater than 250,000 ounces and has a grade greater than 2.5 grams. Now, speaking solely about Burbanks, our flagship gold asset, there are 4 key points that I'd like you all to take away from today's presentation. The first point is that this is a historic and high-grade mining centre, historically producing over 420,000 ounces at 10.9 grams per tonne from both open pit and underground. Importantly, the vast majority of that production came from the upper 140 metres. Point 2 is that over the past 12 months, we've doubled the resource here to over 280,000 ounces through completing around 15,000 metres of diamond and RC drilling. Importantly, however, a lot of that drilling was too widely spaced, so we've wrapped an exploration target around that wide space drilling at depth, which has a range of between 215 to 330,000 ounces, and that sits immediately adjacent to our existing resource. The key point to note on this slide is very much the shallow nature of both the mining and the exploration activities at Burbanks, having only mined down to 140 metres, where a number of our peers within the region and across Australia will comfortably mine and explore down to depths in excess of 800 to 1,000 metres below surface. Now, the next 3 slides are arguably some of the most important within this presentation, and what we're looking at here is a geological long section of the Burbanks Shear Zone. And the Burbanks Shear Zone is our principal control on mineralisation, and left to right across the screen is broadly a strike horizon of around 5.5 kilometres. The first point to note would be our resources. So the dark green and the dark purple are our indicated and inferred resources, collectively totalling 280,000 ounces. The lighter green colour that you can see there is our JORC compliant exploration target with an upper range of 330,000 ounces. Importantly, and I mentioned earlier, that exploration target is exclusively supported by wide space drilling and doesn't include any of the areas that you see there in white, which remain highly prospective. We currently have a 3-phase drill campaign underway, with the phase 1 drill campaign targeting that unclassified mineralisation, which supports that JORC exploration target. Phase 2 is targeting the down dip and along strike extension of known mineralised lodes at Burbanks. And phase 3 is really targeting that greenfields and untested strike extension, with the aim of defining what is the true geological potential of this system. So the phase 1 drill campaign is already underway. We're around 35% complete, and we're already returning high-grade intercepts. Back in December last year, we returned 7 metres at over 57 grams per tonne from just 90 metres below surface. And it's important to note that this isn't a single and isolated hit, and that there's a number of other hits down plunge of very similar grade and widths. This phase 1 drill campaign is expected to be finished in around 6 weeks at the end of March, following which we'll immediately roll on to an updated resource estimate for the Burbanks project. And again, just to drive home the point that high-grade systems like Burbanks are rare and shouldn't be understated, that 375 gram per tonne intercept that we drilled back in December last year was the 10th best gold intercept in West Australia for pre-development gold assets. The second component of Greenstone is our interest in the Mount Thirsty joint venture. Now, Greenstone's held this asset for over 15 years, but up until very recently, the focus had really been in the upper 100 metres, targeting an existing nickel cobalt oxide resource. And there'd been very, very little drilling done testing the lower ultramafic sill horizons. Mid last year, following from Galileo's Callisto discovery just 200 metres away from our licence, we executed a 6,500 metre drill campaign to test these lower sills. What we concluded was that there is in fact 3 distinct zones of mineralisation. We have an upper zone of high-grade nickel, cobalt, scandium and manganese. We have a middle zone of highly anomalous PGE mineralisation, and we have a lower zone of very thick and continuous nickel mineralisation. Within that upper zone, importantly, we intercepted the 6th best cobalt result for 2022, drilling 15 metres at 0.45% cobalt and close to 1% nickel. And importantly, again, we have 17 holes for that upper high-grade cobalt nickel zone still pending. This recent high-grade nickel intercept has served for me to highlight the true geological potential of the Mount Thirsty program. Important to note is that historically the deposit was defined largely by RC drilling or air core drilling, which means that they've drilled to refusal and potentially missed a lower zone of thick, continuous and high-grade mineralisation, which we'll look to test over the coming months. This leads again to a number of optimisation opportunities that we're currently looking at for for Mount Thirsty, which we think will ultimately lead to higher recoveries, higher payabilities, and potentially additional products, all serving to materially improve the project economics of the Mount Thirsty joint venture. Longer term for Mount Thirsty, we believe that this asset would be better placed in a standalone entity, and ourselves and our joint venture partner Conoco will be working actively towards this over the coming weeks and months. Outside of Mount Thirsty, we have a huge amount of news flow coming down the pipeline, including a number of gold assays from our current drill program at Burbanks, also the updated resource estimate to follow in late May, early June, and the continued news flow coming out of Burbanks with the remaining assays. Thank you.
Well done, spot on. We are at the halfway point of our final session for today. Goodness me, you think I'll be drinking, but I haven't yet. We are having drinks at the pool a little bit later on. And believe it or not, even though I come from the bush in Kalgoorlie, I'm one of those horrible people that drinks fire engines when they go to pubs. I find them far more invigorating. Will Robinson, how are you going, sir?
Very well, Chrissy.
Fantastic. Good to see you again.
Likewise.
All right, you're looking relaxed already. All right, so you are going to tell us in your capacity as Managing Director for Encounter Resources all about the large portfolio of copper projects that you have here in WA and also in the Northern Territory that you're advancing, including the emerging Aileron project in West Arunta Critical Minerals Province. Far away. Please make him welcome, everyone.
Thanks, Chrissy, and thanks to everyone who's stuck around to listen to the Encounter Resources story. We're at the forefront of copper and critical minerals exploration in Central Australia, with a focus on Western Australia and the Northern Territory. We're one of the largest project tenure holders across the Northern Territory and Western Australia. And we focus on some of the frontier areas that are seeing a lot of activity in this current critical minerals and copper boom. We've got a very simple share structure. We're well financed through our own funds, but also through our partnerships with BHP, South32 and IGO, who provide significant additional funding into our projects. We've got a board with a mix of commercial and geological skills, the forefront of some of the developments in thinking in geology. They've got a lot of skin in the game. They've put a lot of money into the company over the years and hold 14.4% of the register. We also have IGO and Silver Lake Resources as key shareholders. So given the amount of time today, I'm not going to go through the extensive portfolio that extends right across Northern Territory and Western Australia, but I will focus on the West Arunta, where our Aileron project is going to be a big part of the activity on ground for us over the next 6 months, and where we're seeing the potential for rare earth carbonatites and IOCG mineralisation in an entirely new belt. Our partners will continue to invest in their projects. BHP has just finished a drill program up at the Elliott project in Northern Territory. South32 is about to kick off a drill program at the Jessica and Carrara projects, also in the Northern Territory, and IGO is getting ready for another field season in the Paterson province. So this is really the strategy behind Encounter Resources. It's quite a deliberate strategy that was put together 5 or 6 years ago to be at the forefront of the new mineral fields in Central Australia, with a focus particularly on copper. We've got the skills in-house to generate ideas, to generate new projects, with a focus on sediment-hosted and IOCG copper in Central Australia, while keeping a very clear eye out for rare earths and lithium potential. With those projects in hand, we look whether we want to partner those projects to advance them, whether that's the best way to get from A to B, which is a discovery, or to advance them 100%. So we've got a number of projects in partnership with some of the world's leading mining companies, and over $7 million was invested by them in our projects last year, and I expect a similar amount's going to happen again this year. Drilling will be kicking off in May with South32 and the others to follow. So the presentation today is going to focus on the West Arunta, which we think has the hallmarks of a new copper critical mineral province in Australia. So this is obviously a very remote part of Australia, but it's also a very unique part of Australia. You've got a 100+ kilometre belt of Proterozoic geology near surface, and inside that entire slide, I think there's 7 or 8 drill holes that have been completed. And most of those have been completed over the last 3 years. We drilled the first drill hole into the project at our Worsley drill hole back 2 years ago. The rig unfortunately broke down on that hole, but in the top part of that hole, we drilled up to 0.8% rare earths with copper, gold, niobium, and a whole lot of other diagnostic indicators that were in a potential new IOCG belt. It was a clear magnetic standout anomaly in the data set. More recently, WA1 to our east and to our south has drilled 2 mineralised carbonatites, which were unknown in this region before, and that has really opened up a new search space in this part of the world. So this was a picture of the first drill hole that we drilled into the district. We were very excited when we saw that. We saw all the sort of characteristics you'd like to see on the margins of a new IOCG. The cover depth, we really didn't know when you're drilling the first hole into a region. It turned out to be about 5 or 6 metres before we started to get through the cover. So that was a terrific result. We saw the geochemistry we want to see in an IOCG region, and a number of the elements, including particularly rare earths, which was anomalous in the drill hole. After we got that completed, we got the drill hole age dated. It's identified a new suite of granites at about 1.6 billion years old, the same age as Olympic Dam, with a hydrothermal event shortly thereafter. So it really did tick a lot of the early boxes. This is showing a bit of a close-up of the magnetics in the region. The 3 targets that we're going to be drilling first. We're going to complete the drill hole at Worsley, which is a pretty interesting magnetic target. Likewise at Crean, and we're also going to be drilling Caird, and you can see that proximity to the Looney discovery from WA1, and that's the survey that we completed last year. But one of the keys to finding mineralisation in this belt is going to be gravity. That's showing the area that we've completed helicopter-supported ground gravity so far. It's identified a number of really interesting targets, particularly the Caird anomaly sitting on that endurance fault has been modelled as a pipe-like feature down to about 800 metres. The Shackled anomaly is also very interesting, and our team, while they're out there completing this ground gravity survey, landed on an interesting looking outcrop, and there's not much outcrop out here, and sampled 0.5% rare earths off that. So this really is a clean sheet of paper. We're gathering the new data sets. We're going to drill those 3 targets at Worsley, Crean and Caird, with that starting in the between April and June this year. And we're going to kick off a project-wide Falcon survey, which is going to cover about 100 kilometres. And that is going to be pretty crucial for this, for what we do going forward. Gravity's been very successful in identifying the mineralised carbonatites at P2 and Looney. It's also obviously one of the fundamental data sets that's been so successful in finding IOCG deposits in South Australia under 300, 400, 500 metres of cover, whereas here we're dealing with a very shallow cover depth, and we're told that this Falcon survey could be very successful in this environment. So we're really looking forward to kicking off the drilling, and we're really looking forward to kicking off a very large geophysical gravity survey in May this year. So quickly, just with conscious of time, I just want to touch on quickly on 2 projects in the Northern Territory, where I think we are the largest exploration landholder in the Northern Territory, when the Australian government invested over $40 million in pre-competitive geoscience over the last 5 years as part of the Exploring for the Future program. We were at the forefront of a pegging rush that's taken place in the Northern Territory. Of the portfolio, we've joint ventured farm-in agreement with BHP at Elliott. We've got 2 earning agreements with South 32 at Carrara and Jessica, and about a third of the project portfolio still sits in 100% owned Encounter tenure. This has seen a number of major mining companies secure ground in the Northern Territory in recent times. I'll touch just quickly on the Zeta target that's going to be drilled by South 32, commencing on schedule in May this year, if all goes to plan. That's going to be part of a 6,500 metre diamond drill program that South 32 is going to be drilling across those 2 prospects. So this was right in the north of the project where Zeta is, and when we initially we had the magnetics. It was an interesting magnetic feature, looking like it was on the margin of a major intrusive body. We completed detailed gravity, and it's a coincident gravity feature. And quite fortuitously, you can see there's a line running through it. That's a Geoscience Australia seismic line right across the top of the anomaly. And we came up with a very interesting seismic reflector at depth and some interesting structural context for this anomaly. 3 independent data sets. That confluence of those targets is going to mean this is going to be the first place that's going to send a drill hole in that South 32 farm-in. We've also got lithium that we'll be advancing. We made an announcement about that yesterday. Please come and see us in our booth if you want to hear more about that. It's a major exploration push. We've got significant investment being put in the ground by our partners in our projects, and a big push for our 100% owned projects across Western Australia and Northern Territory. And I'll look forward to keeping the market informed over the coming weeks and months as a very busy 2023 field season takes place. Thank you very much.
He's very good. All right. Don Smith, Director, Tempest Minerals. Come on up here, sir. Now, Don is a geologist. He's an entrepreneur. He's involved with several other unlisted companies outside of Tempest Minerals. He's really passionate about this industry. In fact, he's been involved in it his entire working life, including more than 20 years in operational development, exploration, and consultant roles for juniors right the way through to multinational firms spanning every continent. And he's in the zone, isn't he, right now? I can see that. I know one continent you haven't been to. Antarctica.
You got it. It's on the list though.
All right, on your bucket list. He's a big thinker. Let's see what he's doing with Tempest. Please make him welcome.
Thanks very much, Chrissy. I'm going to be traversing through these slides relatively quickly today as we're limited on time. But of course you can access it online or come and see us in the booth over the next 2 days. Obligatory disclaimer. I've got a quick quote here from young Bill Shakespeare. I just wanted to, I guess my take on this is that we're in Australia, it's the biggest island, and we're subject to the wonders and also the challenges of being in the industry in this place. And of course, we are at the RIU, which I think is well cemented as the premier exploration conference this year, with close to 2,000 attendees all registered. It's quite amazing. So I want to thank the RIU team for hosting us once again. Great job. Bit about our company for anyone who's unaware of us. As a snapshot, we are a Western Australian based company. I'm not particularly commodity focused. I'm relatively agnostic. I believe in good geology and good projects and getting things done. We have a market cap of a little over $12.5 million and a reasonable amount of cash in the bank, as you can see. So one thing I would point out is we have a fantastic team, very supportive board, and they've been critical to everything we did in 22 and beyond. And I want to make special note of Tim Bevis, our senior geologist consultant, who's in the crowd here, who has put quite a deal of this information together. We've always been sustainably focused as a company. It's critical, not just in the modern world where it's a buzzword, but it's actually important as a company to do the right thing, and it means better business. Definitely want to touch on our innovation. So that's something that we focus very heavily on. We are a paperless company. Everything we do is tech-based and goes directly into the cloud. We also pioneering in a lot of new technology, for example, the box scan unit you can see there on the screen. Bit about our projects, hopefully. There you go. So we are Western Australian focused, but we have a global influence or a global exposure. Our main focus at the moment is certainly on the Yalgoo and Mount Magnet projects. They are essentially precious metals, base metals, and energy metals. For those you aren't familiar with Yalgoo, it's only about 4.5 hours north of Perth. It's a bit of forgotten gold field. It has half a dozen world-class ore bodies standing there in the big spheres you can see. But the geology there has stagnated, and we think there's a real opportunity to find more of those going forward. Another thing to take note is, as another speaker spoke about the importance of it being a good thing, being near established infrastructure. You've got 2 highways, rail, power, water, everything you need here to really push things ahead. So a big part of the Yalgoo region is the Malaya project. And it's interesting reflecting that it was slightly over a year ago, we were here at RIU, and we were talking about this project in this conceptual sense, because we'd done some basic soil sampling and a bit of mapping and that kind of stuff. And we were just about to drill our first hole into a brand new greenstone belt and a brand new mineralized belt altogether that no one's ever known's there. And that's pretty exciting as a geologist, especially when you've got all these other large mines nearby. So the very first hole went through several hundred meters of mineralization. Many of you may be familiar with what happened there. We had quite a lot of market interest, but since then we haven't stopped. So we've done multiple geophysics programs, we've done 4 more drilling programs, and we're just hitting mineralization constantly. Not going to lie to you, that can be a little bit frustrating. It'd be nice if some of the holes were dead, because that would mean you could discard those. But when every hole has mineralization in it, that's making a challenge where to focus next. Another quote from Shakespeare here, and I guess that's pointing out the fact that we've got a big one hidden here somewhere. And so here's some information that we just released this morning, and our most recent drill program results were received. We've got several metals that we weren't anticipating, and that's highlights the point of being commodity agnostic and keeping your eyes open. So we've managed to snag some non-trivial nickel, tungsten, and rare earths in this drilling, and we're pretty excited to find out what's going on there. So it's a busy slide, but yeah, we're certainly working on what's going on. The target is primarily a copper target, and as another speaker spoke about, the short impending shortages of critical minerals like copper and zinc. You can see we've exaggerated the quantities in the drilling there, and you can see that we've got multiple zones of very, very serious enrichment in copper and zinc throughout this. There's multiple, there's at least 3 or 4 of them. And we're still putting the 3D picture of what that looks like together. But our geological model has been well and truly proven here, and we're really excited to go to the next phase of narrowing in where that big ore body is hiding. Okay, so we also have a project in Mount Magnet, so directly south of Ramelius Resources and next door to Genesis Minerals. We've got in blue there, the land holding, and we have known mineralization throughout the tenement, including shafts that aren't documented on government records with multiple grams of in the waste dumps. So we're really looking forward to getting and doing some more work on those projects in the coming months. Okay, so as I mentioned, we have a bit of a global influence. We announced last year that we were involved with a company progressing a very large mine in Papua New Guinea called Tolokuma. Many of you may be familiar with it. They are going ahead with an IPO, and we've made a strong investment into that to help progress that. So while we're an explorer at the moment, we have designs of becoming a much larger entity. So Tempest also started its life as an exploration company looking for lithium only, and that was before the current buzz. And so as such, we're still quite leveraged in lithium. Part of that story is our Western Australian assets. We've recently announced that we will be demerging those into a new IPO with an exciting lithium brine project in Nevada. And that's going to be called Electra Minerals. So I'll point out that anyone who is a Tempest shareholder will get pro rata shares in this new IPO. We also have some commercial exposure to previous lithium deals. So upcoming news, we've got quite a lot. We've got more drill results. We've got a massive surface sampling program that we completed just a few days before Christmas. We're pretty excited to get some of that information out to shareholders. And we've got a new target pipeline, and we've also got the commercial stories that I've highlighted already. Key points: de-risk, multi-commodity, multi-jurisdiction, attractively priced. And and we don't stop. We're doing a lot. Another Shakespeare quote for you. And please check out our new information online. We've got a YouTube channel and an investor portal for where you can get more exclusive content and information.
Don, where did that quote come from that just quickly flashed up?
Once again?
That little quote at the end there. Where did that flash up? Where's that from?
From the Tempest by Shakespeare.
Oh, it was. I like it. Well done.
All three of them.
All right.
Yeah.
Sorry. Right. The US EV battery, their supply chain is very keen to secure domestic supplies of lithium. Enter Ioneer Ltd, who believes its Rhyolite Ridge lithium boron project in Nevada, USA, fits the bill and can become a cornerstone of the supplier, of the US market. Now, Rhyolite Ridge is in the final permitting stage, correct?
That's correct.
You have, or you're primed to commence construction. You've got binding lithium offtake agreements. You've got conditional commitments for both debt and equity. That's just one of your projects, though, isn't it? There's more. There's more opportunities for growth. And this man here is going to tell us about them. Would you please put your hands together and welcome MD Bernard Rowe.
Yeah, thank you, Chrissy, and thank you, ladies and gentlemen. So yeah, I'm going to be talking about the Rhyolite Ridge project and the growth opportunities that exist around the main project area. For those of you who do not know about Rhyolite Ridge, it's one of only 2 large lithium and boron deposits known anywhere in the world. We have spent in the order of $120 million on the project over the last 6 years to get it to where it is today. And 4 weeks ago, we had what I would regard as the most significant milestone for the company, and that was that we became the first ever mining project to receive debt funding from the US government Department of Energy, and that was for an amount of $700 million US. So a really significant step forward in the development of this project and the placing us into an enviable position for domestic supply into the US supply chain. Disclaimer. So I'm going to talk about the project as we are currently permitting, but also the growth opportunities that exist around it. Corporate snapshot, we're ASX and NASDAQ listed. We have a market capitalisation of around about 900 million Aussie dollars, 100 million Aussie in the bank. We have about half the register retail, the other half is institution, with our two largest shareholders being Centaurus Capital out of the United States and Sibanye-Stillwater, the owners of the Stillwater mine and one of the largest platinum producers in the world. So Rhyolite Ridge, as we're currently permitting, is an initial stage for the company and one that we've been focused on exclusively over the last 5 or 6 years. It's located in Nevada. It's about halfway between Reno and Las Vegas. And importantly, it is well placed to feed the burgeoning demand of lithium that is arising from these gigafactories that are being built all over the country, with a particular, of course, focus around the eastern states where the motor vehicle industry resides. And so, you know, we see Rhyolite Ridge as becoming a cornerstone and critical supplier to that burgeoning domestic EV manufacturing. And why is that happening? Well, of course, the car companies are driving it and the battery companies are driving it, but now so too are the US government. And I think they were a bit of a laggard in this area up until a few years ago, but we've seen really concrete steps towards ensuring that the US does electrify its transportation sector and it becomes a world leader in that space. There's been tax incentives, the Inflation Reduction Act, the Department of Energy's Loan Program Office, which we're the beneficiary of, and a number of other initiatives to stimulate both domestic production of EVs, but also the complete supply chain domestically. So the deposit itself, it's a sedimentary type of lithium deposit. And I mentioned it's only one of 2 large lithium and boron deposits anywhere in the world. So these are really rare types of deposits, but they're sediment hosted, they're lake beds. They are tertiary in age. So 5 or 6 million years ago, these things were lakes full of water, and you had sedimentation, chemical sedimentation, depositing lithium and boron. The older rocks that surround it are part of the Silver Peak caldera and then the Paleozoic basement rocks. So with the $120 million of work, where are we at? Well, we have a JORC resource of 146 million tonnes containing 1.2 million tonnes of lithium carbonate and about just under 12 million tonnes of boric acid. And all of that is within a 3 square kilometre footprint. Now, the total prospective area at Rhyolite Ridge is around about 22 square kilometres. So we have only just started to test the full potential of this project. And why only such a small amount? Well, we got to 146 million tonnes with that contained lithium, and we realised that really the potential here was to develop, go forward and fund and develop an initial operation and then look at growth opportunities into the future. So the initial mine plan is to produce 22,000 tonnes of lithium a year for 26 years, so 572,000 tonnes of lithium carbonate. So that only represents just over 40% of the total resource, again, only within the 3 square kilometres. The deposit, we completed a bankable feasibility on this 3 years ago in April 2020. That executive summary of that's available on our website. The numbers are old, yes, but some things, of course, have changed and some things have not. The 60 million tonnes of reserves, the total contained lithium and boron, but one of the perhaps more significant things that has changed over this period of time has been the pricing assumption. So back 3 years ago, we were using 11,000 lithium and $700 per tonne boric acid price. We ran a pilot plant. We produced the materials. It's been converted into battery grade material by our partners and is looking really exciting. So the project itself is due to, Chrissy mentioned, we're in the final stages of permitting. So we're expecting to get that final permit in January of next year, 2-year construction period into 2026 for domestic, for ramp up of that first domestic production as phase 1. The reason why we are so, and we say this in much of our materials, is what the reason we're so low cost in producing lithium at this project, or we will be, is because of the amount of boric acid that we produce. So the boric acid covers about 70% of our operating costs. We have all of the funding in place to the tune of $1.2 billion US, 700 from the government and 500 million from our partners, Sibanye-Stillwater. And we have significant growth opportunities. The 3 square kilometre resource area that I showed earlier in the South Basin represents just about 1/3 of the total area that's prospective, and we have done detailed gravity. We haven't drilled those areas yet, and we can't until we have our full permits in place, but we're expecting that significant resource to grow substantially as we drill. The gravity just helps define the architecture of the basin. The 146 million tonnes of resource that we have, which includes the 60 million tonnes of reserve. This is high boron, high lithium type mineralisation, but this is a sedimentary type deposit, as I mentioned, and these sedimentary layers contain lithium and boron in varying amounts. So there are 4 units there, M5, B5, S5, L6, all mineralised with lithium, but only really the B5 and the L6 contain significant quantities of boron. So there's significant potential to add many, many tonnes to the deposit by incorporating this other material, and we're working on a resource update to include those. The North Basin is 5 kilometres to the north. It was drilled by Rio Tinto for borates in the 1980s and 90s, about 50 holes, which we have. They're not JORC compliant, so you won't see them published, or we can't use them for resource estimates, but we did drill 2 holes to confirm, and you can see they're very significant thicknesses, 100 and up to 200 metres of more than 1,000 ppm lithium from surface. And again, the gravity to help define the basin. This area has got a footprint of something like 14 square kilometres, several times larger than what the South Basin area hosts. And we're doing leach tests on that material as we speak. There's a detailed summary of which I'm not going to go through today, but please come to our booth 85 and we'll happily step you through all of that information to show you how these deposits compare. And in conclusion, you know, the combination of lithium and boron is a really positive one. We are well positioned to bring on that domestic supply into the US. We're well funded, supported by the government, experienced team with a world-class deposit and significant potential to grow this project as we move forward. Thank you very much.
Thank you. Right. Our next company is Chasing Circadian Stalinalgos. Did I say that? I probably said that incorrectly. This is going to be corrected for me. What are they, regardless of my bad pronunciation? What I can help you with is the fact that they are in very hot demand. Projection equals massive profits. Next projection, what can that mean for us? We're going to find out. And it's why explorers like Nordic Nickel, who've just joined us up here on stage, are chasing them. Nordic actually holds a district scale land holding of highly prospective nickel sulfide tenements in the happiest country in the world, Finland.
That's right.
There you go. So we're going to head north. We're going to talk critical minerals at a critical time. Would you please welcome the CEO and MD of Nordic Nickel, Mr. Todd Ross.
Thanks, Chrissy, and thanks everyone for sticking around. So we're getting there towards the end of the day for the first session of the RIU Explorers Conference. So thanks everyone for putting it on. It's a great event. I'm very happy to be here. I think I'll make it worth your while to sit through this presentation towards the end here of the day as we introduce the Nordic Nickel story to you all. I will try and keep it snappy. Nordic Nickel is a newly listed nickel sulfide explorer. We listed on the 1st of June last year. We have two high-quality district-scale projects focused on the central Lapland Greenstone Belt in northern Finland. We've assembled a highly credentialed team of geologists in Finland, but also in particular of consultants that we're working with in country. We have been recently selected to participate in the BHP Explore program, which has given us a lot of support, and it's a 6-month program. We get some funding through that, but most importantly, we get significant amount of support from them through the project. Within the first 6 weeks of listing, we were able to put out a maiden resource based on some historical drilling that was done by Outokumpu back in the 80s and 90s. And I'll touch on that in a minute, but that was a 133 million tonne resource for 278,000 tonnes of contained nickel and 12,500 tonnes of cobalt. Our strategy is really targeting both near surface disseminated nickel, but also the deeper high-grade massive sulfides, as Chrissy was referring to as the Sikora style analogues. That's what we're all about. There's plenty of near surface disseminated nickel mineralisation, and we'll get onto that in a minute. But really the game changer in central Lapland 10 years or so ago was when Anglo American discovered the Sikora deposit, and that's what we're chasing. So we've got an exceptional pipeline of targets and our drilling's underway. So we're just getting started. We're only 6 months old. We're about critical minerals at a critical time. Why? Because nickel is in hot demand, as we've heard a lot of already today. Securing supply of nickel, in particular in Europe, has become a strategic priority. There's lots of incentives coming through from the EU. Finland as well is also a positive mining jurisdiction, has a long mining history, and is incentivising investment in the mineral space in Finland. We're in the central Lapland Greenstone Belt, which is highly prospective, certainly has a lot of discoveries that have been made over the years. And we have a large land holding in the central Lapland Greenstone Belt, over 500 square kilometres, and our drilling, as I said, is now underway. Why Europe? Well, Europe has a lot of gigafactories being built. It's set to become the second largest battery cell manufacturing region outside of China, and Norway and Finland host the entirety of all the smelting and refining capacity for nickel, which gives us a good pathway to the market once we develop our project. So our projects, as I said, we're chasing Sikora style analogues in the central Lapland Greenstone Belt. We have two projects. Our flagship project is called the PUA Nickel Project. It's around 240 square kilometres of ground. We've just started there on our drilling campaign. We have the same ultramafic lithologies as the Sikora deposit, and what was previously they were drilling, and all the drilling that was done, the 51 holes previously by Outokumpu, they all ended in mineralisation. Maximum depth was around 300 metres. Geophysics wasn't used back then, and that's what we've been using now to get our targeting underway. Our second project is called the Minikioki 3 project. It's also in the same ultramafic lithologies similar to Sikora, and that's located down to the south of central Lapland Greenstone Belt. So our PUA project, it's as I mentioned, it's a district scale land package with 51 holes drilled previously. Our maiden resource we put out in that first 6 weeks based on those 51 holes. We were able to get access to all the drill core previously and relog and reassay that. We knew there was near surface disseminated mineralisation throughout. What we didn't know was how much massive sulfides was potentially contained there. And when we relogged and reassayed that drill core, we were able to detect that. So that's our focus, is the dual exploration targets. In terms of the regional geology and why we're so confident that we're in a Sikora style analogue, or have the potential for a Sikora style analogue here, is we're in the same ultramafic lithologies as I mentioned. We have a overall, if I can use this pointer. This is where we're exploring at the moment. That's our hot and Vara license. We have 25 kilometres up this belt here, another 10 kilometres up this belt here, all over this matrix ultramafic lithology that exists and has been mapped previously. So we're going to be here for a very long time to come. This is a snapshot of the drilling that was previously done by Outokumpu. So on the left-hand side, you can see this is some of the very wide intersections. We're talking 122 meters at 0.25% nickel, very wide, near surface disseminated style nickel mineralization. But then the massive sulfides, and the example here is the 0.9 at just under a meter, at 5% nickel. The massive sulfides intersections that were picked up through that. Importantly, is that when we've done the initial met test work, the majority of the nickel is sitting in sulfides, which is going to be excellent for flotation later on, processing. As I mentioned, geophysics is critical in terms of detecting and coming up with our exploration targets. The 51 holes that were drilled by the Kumpu, 26 remain open, and we've been able to get in and survey 17 of those so far, and picked up a number of EM conductors and targets that we're focused on, in particular in the middle of the page here. This one was the one that intersected or correlates with the high-grade intersection, the 1 meter at 5%. It's one of our first targets. Just below that is a plate sitting at around 400 meters. When we stepped out and did a fixed loop EM survey over that area, if you have a look at that blue plate that sits there, that's the same one that I had on the previous page. And then we picked up 2 massive conductors sitting below that. The one in the middle of the page is sitting exactly the same depth as where the Sikora deposit was discovered. Sikora, by the way, is a 44 million tonne nickel copper project, 1.9% copper and 1% nickel. And that's going to be one of our first targets in this middle of the page here, this area. There's also this very large conductor sitting at depth around 1,500 meters, which we're hoping it could be the base of the cumulate layer and certainly going to be part of our drilling campaign as well. As I said, drilling's underway. We received our first rig early January and the second rig in the 3rd week of January. We now have completed just under 3,000 meters already. The visual observations is what's getting us excited, is that they indicate continued widespread sulfide mineralization. Obviously, we're waiting on the results of the assays, but what we're seeing so far is certainly very prospective. In the 3rd hole that we've drilled, we're seeing approximately 30 meters of semi-massive sulfides, and we'll be getting results out on those as soon as we get assays back in the next 8 to 10 weeks or so. Overall, we've got about 22,000 meters of drilling plans over the next 14 months. As I said, we've got 2 drill rigs there. One will leave in about March. The other one will stay there for 14 months and just continue to drill. Putting it into a scale image here, if you look on the right-hand side, this is our PUA project. Here is where we're drilling, and that's where our maiden resource was put out. Putting it onto the global scale, this is the size of the Merton Vara formation and our Hot and Vara deposit that sits down the bottom here. If you look at some of the other global projects around the world, the scale of this project is huge and a big part of the reason why with BHP were interested in us to come in on this Explore program as well. Quick snapshot on our capital structure. As I said, we listed on the 1st of June. We listed at 25 cents. We've been trading up to as high as 40 cents. Current market cap around 40 million at the moment. We've just got just under 10 million in the bank. So big future ahead. As I said, we're just getting started. We're focused on what we believe is a district scale land holding, looking for massive sulfides. We've got plenty of mineralization of near surface disseminated nickel mineralization. We've got a maiden resource out already and drilling is already underway. We'll be there for the next 14 months drilling continuously. Thank you.
Thank you very much, Todd. Thank you. Right. Got one to go, and this is going to be a good one. Look at him striding up the front here. Now, the passion and side hustle of this fellow is story writing. He's very talented. He's actually a finalist in the New York City Midnight Short Story Writing Competition, which is quite a feat. In fact, he's just the man, I think, to keep our attention around out day one. He loves a chat. He's also co-host of the ABC Bulletin's Pot of Gold. His day job, though, and the reason he joins us on stage for RIU is in his role as Global Head of Institutional Markets for ABC Refinery. So, with some expert insights into the economy and what it means for gold, will you please welcome Nicholas Frappell.
Thank you very much for the kind introduction. Good afternoon, everyone. I'd like to thank the organisers for allowing the opportunity to speak here today. Today, I'll update and present on gold in 2023, really based on the economic climate and technical analysis, such as cycles and positioning for gold, currency, and rates and how they interact. Russia's invasion of Ukraine will continue to reverberate through 2023, and large offensive are likely in an effort to break the winter deadlock, with consequences that will reshape the kaleidoscope frequently. So obviously bear that in mind in terms of the macro outlook that I make. Now, predicting market direction is always a chance to get things wildly wrong, but I'm pleased to note the dollar index started its decline in the second half of last year as predicted in the Sydney RIU, although it went way higher than I'd anticipated. I thought a decline through US dollar 1670 would be a real problem for gold, except that it wasn't. Gold's recovered through key resistance levels as the dollar has weakened. Now, after a substantial dollar rally that was negative for gold, what next? I'm aware that the dollar index isn't widely traded. It's the constituent parts that are really important. Using the dollar index as a macro overview is an easy lens, though. Dollar bullishness in 21 and 22 rested on three key elements, which I'm going to discuss: yield gap, positioning, and cycles. Now, the dollar yield gap is actually converging, and that is weakening for the dollar. The real reason why is because the Federal Reserve was the first major central bank to engage in a sustained round of tightening. The rest of the world was essentially lagging, but now they've caught up. And in a kind of FIFO manner, other countries are tightening vigorously. And that's led to a narrowing of the gap between America and G7 ex-America interest rates. And that's pushing the dollar index lower. However, one thing to be absolutely sure about is that the Fed has very clearly articulated that they will need substantially more evidence to be confident that inflation is on a sustained downward path, and it's very difficult to manage the risk of doing too little. What does positioning tell us? Well, last year, investor positioning in the US dollar started to roll over after rising rapidly from early 21. Long started to decline, and short started to rise again. So positioning supports the view that the dollar uptrend has largely played out. What about the 39-month cycle that we widely use? Cycle analysis in early 21 made a compelling case for a dollar rally that could last for between 18 to 21 months, depending on how symmetrical the cycle turned out. That implied a dollar peak around Q4 of last year. I actually thought that it would stop about 103 because of a third touch of a trend line. However, completely wrong. The dollar cruised on to a stratospheric 115. Cycle interpretation of the dollar suggests a further secular decline to dollar index level of about 94 and 95 sometime in June or August of 2024. So that's a very long-term outlook, but one that is profoundly helpful to gold. In the nearer term, there's a fundamental and a technical case for a dollar bounce. The fundamental case is that the dovish Fed is fully priced in, and a slowing inflation data in other countries will allow for relative revaluation in favor of the US dollar. The technical case for a dollar rally is the close above the 50% retracement of the Jan 21 low to the September 22 high, and support within the weekly Ichimoku cloud. So if there is a bounce, and I'm throwing out several hostages to fortune here, expect to move to 108, 109 possibly, within an expected cycle decline further on. Now, the euro has helped exacerbate dollar weakness, largely because a warmer winter helped balance the payments in the Eurozone, which in turn helped the euro. And furthermore, the ECB has been more hawkish than perhaps some observers expected. The second large component of the dollar index, of course, is the Bank of Japan. Now, inflationary pressures in Japan have forced, or perhaps optimistically given, an exit path to the BOJ to exit what's called yield curve control, which is, amongst other things, or amongst other policies, has artificially depressed the Japanese bond yields. After years of zero yields, the transition away to a market, sort of a free market exchange for bonds may significantly increase macro risks. And I suggest this is something that everyone is aware of going through 2023. We're waiting the outcome of the collective Shunto wage negotiations this month and next month. We're seeing some of the highest wage pressures in Japan in 25 years. So my take on this is that there may be a sooner rather than later exit from yield curve control, higher Japanese yields, higher yen. The yen's progress is likely to influence gold. A rising yen isn't always associated with rising gold prices, but recent behavior suggests a return to form. And again, that may support a case for a higher gold price. Moving on to real yields, broad expectations of recession in 2023, which varied between 1/3 and 1/2 at the beginning of the year and are probably a little bit higher now, suggest that yields will fall. And depending on how sticky inflation is, real yields may fall indeed faster. Technical targets suggest actually a possible move from very high recent levels to a level closer to zero again. And if so, that would be profoundly positive for gold. That is the hardest one to call, though, out of all of the other sort of potential scenarios in terms of rates, yields, and positioning and so on. The flip side to this expectation, of course, is that unless the Fed applies the brakes hard and faster, US economy completely avoids a soft landing and just executes a very noisy fly past. Now, here's a graph showing the end of negative yielding bonds. One chart symbolizes the move back to normality and tightening, or perhaps normality. It's this one. Now, negative yielding bonds have all but disappeared in the world. To some degree, this is an enemy of gold, but it actually reveals two things. It reflects the onset of the inflation pressures that help build a bid for gold, but also the decline in gold prices, which is the inverse of gold yields, displayed here, shows you the tremendous amount of damage that bondholders have faced. And of course, that supports the portfolio argument for gold as a sort of diversifier. Looking at market-based interest rate expectations, barely a month ago, I'm sure a lot of you would have been aware that the talk was of the Fed signaling a pivot to easier rates, and the RBA has almost finished their tightening cycle. But you can see from the red lines up here that actually we're looking at higher, possibly higher for longer. And actually, if I looked at this 2 days later, I'd have had to have changed the y-axis because the RBA implied policy rate from market expectations was touching the top of the graph there. So that's over a 2-day difference. So this is a volatile and ever-changing rates environment. Higher rates hurting equities and bonds and real estate, and gold too, of course, but gold, again, a good diversifier in this environment. Let's revisit gold via the dollar, via inflation and adjusted yields, and via crude. I know I'm barreling through this, but we will actually make all this stuff available to you for anyone who's interested. If you look at gold through a simple regression, gold is not far from fair value when it comes to the, if you look at gold via the US dollar, it's not too far from fair value. It's not too far from fair value for crude either. It's a little bit of an outlier when it comes to 10-year Treasury inflation-linked bonds, which is a very strong predictor of the gold price. And other observers have made the point, very valid, I think, that gold could be quite highly valued with respect to real yields. Moving on to positioning. Gold is seeing significant inflows from managed money, coupled with buying from short coverers. Trigger point originally the expectations of a Fed pivot, but it's carried on. Note that managed money net positioning over the longer term here, that's the long-term average. The net average, the net at the moment, still way below that. The inference I'm drawing from that is that positioning is not overstretched and there is scope for more longs to join the market. Central bank buying has been a major issue in the gold market in 2022. The official sector is reported to have purchased around about 1,100 tons of gold in 2022, a massive change. Pinning down the exact number is hard. Data can be misconstrued, delayed, and opaque. But why? Why are central banks keen to buy gold? I'll give you 5 reasons when you actually ask central banks. They have views on legacy positions, crisis performance, long-term store of value, no default risk, and it's a portfolio diversifier. When asked the question, is gold part of as a reserve, part of a de-dollarization strategy, 80% of central banks consider the question irrelevant. Precisely 0% said yes. It's worth restating because there seems to be a tacit and unchallenged belief amongst a minority that the world trading system should be remade with some other reserve currency other than the dollar. That may happen one day, and who knows when. But the casually suggested alternatives often include well-known nations with significant and persistent trade surpluses, currencies that aren't actually fully convertible, none of which economically suggests they're candidates for reserve currency status. So that's something I just want to, scotch that idea, and I don't think it's credible. The two key reasons for increased official sector gold holdings that really resonate: lack of counterparty and credit risk, portfolio diversification. Given the way the official sector goes, as it goes for us. The other thing you have to bear in mind is that, of course, central banks are not immune from the wealth destruction effects of rising yields and declining bond prices. So increased gold holdings do diversify themselves away from some of the actual economic impact on their balance sheet holdings. Now, China reopening, a big issue. Chinese gold demand down 18% last year. Sudden lockdowns made physical delivery of metal a problem and, of course, impacted retail activity. China's reopening in December saw a crash in subway ridership, which has subsequently reversed itself. Property sales down 32% year on year. Why does that matter? Because wealth in China is significantly tilted towards property, and declining wealth there may affect consumption. On the other hand, anecdotally, we're seeing brisk demand there. Two ways to view reopening. Positive way, return to normality means logistics improving, people get out to buy gold. The negative is what's going to happen with property. Financial research firm CSLA estimates that over the next 7 years, there'll be a significant move away from wealth in property to wealth in finance, and that should, given the Chinese propensity to save and invest in gold, be a long-term boost for gold. Gold price behavior, what you're all waiting for. Weekly Ichimoku cloud shows a return to a positive medium and long-term trend. Support extends all the way through to the bottom of the cloud. And that is there. That's about $1,825. Gold price projections going forward, very simplistically over a monthly chart, suggests that a break of the huge double top that we're aware of at 2075 suggests a target up to 2470. If I look at a more complex interpretation via logarithmic point and figure, you can see that there are multiple targets, some of which not as aggressive as that, others more. And of course, I will share this with you later. Before I go, silver price. There's always people in the room that love silver, and I just want to share that very long-term chart with you because it's so highly interesting in terms of the long-term projections. And the next upside projection, $28. You notice when the extreme projections are reached, the price rolls over and turns back. So in summary, now that the US dollar uptrend seems to have reversed, gold appears to have every chance to extend its rally. Beware over-optimistic beliefs around monetary easing. There is scope for more tightness to come, and since this presentation was prepared, more evidence to support that. The Bank of Japan ending yield curve control is perhaps the most significant monetary event of the year, and I suggest that you try and keep wise to that. It's probably more important than changes in Federal Reserve expectations. Market volatility not going away anytime soon. Gold price targets remain ambitious on the upside and plausible above the 2022 lows of 1620, which naturally are critical. As mentioned, I do a podcast and be very happy to add those of you onto it. Thank you very much indeed.
Bang on, Nicholas Frappell. Thank you so much for rounding out our day one. Thank you, everyone here. Now, just